We're starting this question with a production budget rather than a sales budget, although we will need the sales figures later. Slight difference between higher and ordinary level here in that you have to work out the change in stock for yourself. They're telling us they want to reduce stock levels of everything by 10%. So they give us the opening stock of 50 units for basic, so that means less 10% would be 5, so that means their closing stock will be 45. So our typical production budget therefore will be our budgeted sales 1800 plus the desired closing stock of 45, which is 90% of 50, less the stock they already have of 50, so they wish to produce 1795 units of basic. Run through deluxe there for yourself to double check that. Okay, we'll move on to part B now. Part B then is our material purchases budget, which really is in the first 3 lines is a material usage budget and thereafter a purchases budget. So they plan to produce 1795 units of basic, and each of those uses 5 kilograms of material A. And then for deluxe, they plan to produce 1494 units, each using 7 kilograms of material A. So that's 8975 and 10458. So just to cover production for usage, they would need 19,433 kilograms of material A. And then we make our stock adjustment. We also want to have enough to cover the closing stock, which is 2,700 kilograms of material A. That's down 10% on the opening stock of 3,000. So remember, in all our stocks, we're cutting back stock levels by 10%. We did it for finished goods, we're doing it for raw materials. So our 19,433 kilograms of material A to cover production, plus the 2,700 kilograms for the required closing stock, brings us up to 22,133, less the 3,000 kilograms of material A that they have already, means we need to purchase 19,133 kilograms of material A, and the budgeted purchase price during the year is €5 per kg. So we plan to spend €95,665 on purchases of material A, and check out material B then for yourself. Just by the way, the €5 purchase price for material A is the value we will use for closing stock at the end of the year for our raw materials when it comes to doing that later. Part C, our production budget or our manufacturing budget. It's really a budgeted manufacturing account. And remember, the typical layout of a manufacturing account would be opening stock of raw materials plus purchases less closing stock gives you cost of raw materials consumed. Add your direct costs, like always labour, that will give you prime cost. And then you'd have your overheads, both fixed and variable, and that's the sequence that's being followed in this as well. The opening stock shouldn't pose a problem. We know it's 3,000 kilograms of material A at 450 and 2,000 kilograms of B at 550. And then we add in the purchases of raw materials that we got in the B part of the question, which totals to 185.59. Less our closing stock of raw materials. Again, now remember, raw material quantities are going down by 10%. So for A, we've gone from 3,000 kilograms to 2,700, and for B, we've gone from 2,000 kilograms down to 1,800. And in each case, we're multiplying by the purchase price during the year, which in the case of material A is €5, and for material B it's €6. The combined closing stock figures then is 24.3. So we have cost of raw materials consumed, although those words aren't written down, nor do they need to be, €180,759. To which we then add our labour costs. That's like your labour, your direct labour budget. You know, we plan to produce 1,795 units of basic. Each takes 4 hours, and we pay our employees €15 per hour. That's 107,700. And similarly for deluxe, we plan to manufacture 1,494 units. Each one takes 5 hours to produce, and we're again paying €15 an hour. So that's 112,050. So our labour costs budgeted at 219,750. And then that brings us down to our variable overheads. Now the question told us clearly, if you look at the end of the question, it says that our production overhead costs are expected to be variable €8 per skilled labour hour. Now what that means is that every hour spent on labour in the factory is going to cost us €8 for overheads. So our variable overhead budget there is very similar to our labour cost budget. If you compare the figures, you see we plan to produce 1,795 units of basic, and each one will take 4 hours. We've said this already. And now we're going to multiply by €8 to cover our variable overheads per hour. That's 57,440. And we plan to produce for deluxe 1,494 units. Each one takes 5 hours, and we're going to charge €8 to cover our €8 per labour hour to cover our variable overheads. So that's 59,760. So our variable overheads are 117,200, and the final overheads, fixed overheads, they gave us 322,300 in the question. So our cost of manufacturing is budgeted for €840,009. You'll need to go over this again. Part D of the question asks us for a budgeted trading account. The sales are okay. I think that's our typical sales budget. You know, it's the quantity by the selling price. So that's €978,000. I'm sure you can work through that okay. Sales less cost of sales, and of course opening stock is our first cost of sale, and we're starting off the year with 50 basic at €220 each. The question tells us this, and similarly for deluxe, we have 60 units by €290 each. Again, all these figures are given to you. So our opening stock totals 28,400, to which we add the cost of manufacturing, because of course it's a manufacturing firm. We don't have purchases of finished goods. Instead, we have the cost of manufacturing that we got from our manufacturing budget, 840,009. And then we subtract our closing stock. Now, you can see the figures here. We know it's 45 units of basic because, you know, we're down 10%. And we know it's going from 60 to 54 units for deluxe. But it's the unit cost there is the challenge in this question. Where did the €223 cost for basic come from? Where did the 296 units for deluxe come from? We'll do that in a moment. Just accept the figures this time, and in fact in some exams they'll tell you the cost of your closing stock. So our closing stock is 26,019. So our cost of sales 842,390, giving us a gross profit of 135,610. As I said, the challenge here really is in working out how did we get the €223 cost for 1 unit of basic, and how did we get the €296 as the cost for 1 unit of deluxe. Right, so let's try to sort out where we got the €223 as being the cost price of 1 unit of basic. We've been given most of this information already because the question told us that a unit of basic uses 5 kilograms of material A, each one costing a fiver. It uses 3 kilograms of material B, each kilogram costing €6. And it takes 4 hours to produce 1 unit of basic, and we pay our employees €15 per hour. So that brings us through the €25 from material A, the €18 from material B, the €60 for direct labour. Remember, the question told us that we're going to charge €8 per hour, per labour hour, to cover variable overheads. So, as each unit of basic takes 4 hours to produce, we're going to charge €8 per labour hour to cover our variable overhead, so that's €32. And now we have our fixed overheads, and they're telling us it's 4 hours at €22 an hour. But if you look down below, you'll see where they got the €22 an hour. You see the fixed overheads for the entire factory are budgeted at 322,300. We used the figure already. And we're going to divide that budgeted overheads by the number of labour hours we plan to spend working in the factory, which you can see is 14,650. Now, where did we get that? It's the budgeted overheads, 322,300 we said, divided by the number of hours we plan to work in the factory during the year. We're going to produce 1,795 units of basic, each one taking 4 hours, so 1795 by 4. And we're going to produce 1,494 units of basic, each one of those taking 5 hours, so 1494 by 5. The sum of those two figures below the line is 14,650. So we get what would be called a fixed overhead absorption rate of €22 per hour. You get overhead absorption rates by dividing your budgeted overheads by some level of activity, and in this case the budgeted fixed overheads are 322,300, and the level of activity they're telling us to use is the total number of labour hours they're going to work in the factory during the year, which is 14,650. So we get an overhead absorption rate for fixed overheads of €22. So back up a bit there. Our fixed overheads now are going to be 4 hours, because remember, one unit of basic takes 4 hours to manufacture, multiplied by the overhead absorption rate of €22, giving us €88. So the sum of the 5 figures, material A, material B, the cost of the direct labour, the cost of the variable overheads, the cost of the fixed overheads, becomes 223. And maybe you'll try it for deluxe yourself to get the 296. Yes, it's complicated, but it's only arithmetic. The marking scheme gives 4 points. They were looking for 2 well-made points at 3 marks each. For me, 1, 2 and 4 would be the most important ones. The first one, budgeting is part of the planning process. It's a financial roadmap for the business. Now, remember, those reading business would remember that the 3 important activities of management would be planning, organising and controlling. So we're talking here about the importance of planning. And budgeting is making a plan. So you've made your plan, and then you could jump down to 4, we'll say. You've made a plan. That's what you hope to do. Now compare it with what you've actually done. The difference between your budget and your actual performance is called a variance. And variances that are adverse would mean that, for example, you spent too much on raw materials, or you took too long to make the products. They'd be called adverse variances, and they get thrown up when you compare your actual performance with the budget. And you would try to explain why these variances happened, and you would of course then take measures to ensure that they didn't happen again. That's what he's talking about in point 4. Going back to 2, you have a sales budget, you've got a purchases budget, a labour budget, and they're all the functions of the sales manager, the purchasing manager, the production manager. So in doing a budget, you're depending on the contribution of each of your line or area managers, your department managers. And of course that then explains the areas of responsibility that your managers have, and you would usually give them bonuses then if they reach their targets. That's what he's talking about there in helping to define areas of responsibility and motivating staff in his point 2. His point 3 there really is about, if you have to budget, you're thinking of the best ways of doing things, and that's of course adding to the efficiency of your business, to the efficiency of your organisation. There's a lot going on in this question, not helped by the fact that you had to work out the cost of your closing stock. As I said, sometimes that's given to you. And remember, you've got 36 minutes in which to do the question.